Good day, everyone, and welcome to Transforming Mortgage Operations, Automation, GenAI, and Your Path Forward. My name is Jane Lawrence, and I will be your host and moderator for today's session. Before we jump in, I want to introduce you to our two esteemed panelists who both bring their unique perspectives and thought leadership to this discussion on the mortgage industry. First, welcome Armin Massey, Senior Vice President of Digital Process Operations at HCLTech, who joins us from Denver, Colorado. Armin brings 40+ years experience in the mortgage industry, primarily for large money center banks, and in the last 10 of those years on the outsourcing side of the industry with HCLTech. Along with Armin today, we welcome Francesco Palo, Chief Growth Officer at MOZAIQ, joining us from New York. He is a seasoned business executive and technology entrepreneur with over 25 years of global leadership experience, focused on enabling enterprises to adopt transformational technology solutions at scale. Welcome, both Francesco and Armin. Over the next hour, Armin and Francesco will share their insights on the current mortgage market dynamics, the benefits of intelligent automation, and trends that will impact the industry and how they predict you will run your business in the future. We'll also have a Q&A session towards the end, so please feel free to submit your questions in the comments at any time throughout the session. So with that, let's get started. Armin, would you like to kick off our discussion by sharing your thoughts about the current challenges and trends that you're seeing in the mortgage industry?
Sure, Jane, and thank you. Hi, Jane. Hi, Chesco, and thanks everyone else for joining. So the first chart here really gives us a good view as to what's happened in recent years. And again, let's sort of go back in time to the COVID times, which brought unprecedented record volumes, right? The origination volume doubled from 2019 to 2021. And again, if we think back, there was a lot of things that we really had to deal with. One was obviously a workforce that often was work from home. This volume required a massive hiring effort in the industry. So we were hiring people all over the country. It had, significant increased costs, and we were all vying for the same resources. So there was also some very unpleasant things that happened as well. We had quality issues. We had issues with the salability of loans as a result of what we did. We had some bad behavior from employees that were working remotely. Some cases, people were even working for other companies. So I think as we sort of look back on that time, I think there was really a cautionary tale of something that we really all wanted to put past us and maybe find alternatives going forward when the next real spike in volume happened again. Then, obviously, we saw the inflation hit the industry and the country. And again, monetary policy with the Federal Reserve starting to increase Fed funds rate starting in March of 2022 had a total adverse impact on the marketplace. And what we saw was it is really housing coming to a screeching halt and lending really slowing down. So that certainly was something that had to be done in order to reduce the inflation rates. But again, when you take a look at industries that were impacted by COVID and then post-COVID, certainly the housing industry in the United States had probably the greatest impact and really nearly a virtual collapse. Chesco, I don't know what your views are, or maybe you can opine on that a little bit.
Sure. Thanks, Armand. I think if you take a little step back, I'm not going to go over the numbers. You did a great job, Armand, of explaining kind of the what happened during those times. But one thing to think about from a mortgage perspective is that a mortgage is a commodity, right? And when you sell commodity products, you're competing on primarily two things. You're competing on customer service, and you're competing on price. You're enabling your brokers to be more efficient with the right tools. You're enabling your customers. You're satisfying your customers by giving them the right level of visibility in a timely fashion. What you mentioned earlier, Armand, in terms of hiring people at a rapid clip to meet the volumes and then having to reduce that hiring spree, impacted pricing in a very negative fashion, right? We know mortgage is a cyclical market. It's a challenge to predict loan volumes. When that happens, you don't know whether you've got enough staff or whether your margins are going to be in the positive territory. And because it's a perennially low margin business, as inefficiencies creep into the process, or as shocks to the market occur, like what happened a few years ago, then your economic model is going to be in jeopardy, right? Not to mention that we all know that, unfortunately, unlike other financial services lines of business, unfortunately, mortgage is still a very paper-based process. There's a lot of manual intervention. There's a lot of repetitive tasks. Because of the cyclicality, again, the rate of adoption of technology has not been at the levels of other segments of the financial services industry. And so we're always seeing lenders struggling when there are these shocks, whether it's a massive increase in volume or a massive decrease in volume. Their cost base is going to get impacted. Their efficiency rates are going to go down, and they're going to be suffering from a competitive perspective. And so, all of those things combined, the shocks, the inefficiencies inherent in the process, forced lenders and is forcing lenders to think through, how can I prevent from making the same mistakes again?
Yeah. And so, Francesco, given all these challenges, you mentioned volume unpredictability, low margins, low rate of technology adoption. Let's talk a little bit more about automation specifically. How do you see technology and automation benefiting or helping the lenders avoid the mistakes of the past?
Thanks, Jane. I would start with level setting on the definition of automation. Automation is one of many things, but we like to see it as the configuration, the integration, and the deployment and use of automation and AI technologies to streamline processes and functions in support of human workers. Right? If you take that perspective, then it becomes clear when I start talking about individual technologies like RPA, which we'll talk about later on in terms of their applicability. But RPA in the last 4 or 5 years has been the go-to technology of choice for a lot of lenders. We've worked with many customers that have that already in-house. The problem with RPA is that it's an old technology. It's been around since the late 80s, early 90s. I mean, I was using it in the early 90s myself when we were scraping data off of green screens, right? The challenge is that even though it's 30, 40 years later, it's still unstable. It is expensive if you don't think through strategically how to deploy RPA effectively, and the ROI is lacking, right? The next level up from a technology perspective is IDP, or intelligent document processing. OCR technology configured for specialized uses like document indexing or data extraction from the documents. The problem with this technology is that no matter how much you try, your accuracy levels will rarely go above 80, 85% on a whole. You can apply machine learning on top of IDP. The problem with machine learning is you need hundreds, if not thousands, of documents to train the machine itself. Enter GenAI, right? Since November of 22, it's had a huge impact on not only the mortgage industry, but on everything that we're doing. Kudos to Professor Hinton for winning the Nobel Prize today in physics for his contributions to AI. It was his foundation that led to where we are today in being able to use chatbots. The problem that we all know with GenAI is that if the data underlying the model is inaccurate, then it will spit out garbage. It will hallucinate, right? Now, there are use cases in GenAI that we'll talk about later that we've seen it with mortgage lenders. One thing that I'll say before I pass it off to Armand is that GenAI should always be looked upon through the lens of responsible AI. In other words, providing transparency. Where is the data coming from that trained the model? Accountability. Who is the ultimate decision maker in allowing an answer to go through? Is the data filtered for fairness, diversity, inclusion, privacy, security? All of those requirements. If you're going to go down the GenAI path, you need to think about it from that perspective. But ultimately, again, it's a holistic view of automation. Point solutions will only get you so far. Point solutions impact upstream and downstream processes. You really need to think about the framework that you're deploying for automation so that you can scale and build value on top of that. Armand.
Great. Thanks, Chesco. But certainly here at HCL, I mean, HCLTech is first and foremost a technology company. Infrastructure is a very large part of our business in supporting companies and industries all over the globe. We also have a very large apps business. And then for Jane and I, we both work on the DPO, the digital process outsourcing business. Many of you know DPO as BPO, but we've called it DPO for years because all of our engagements, or I should say most of our engagements, include some type of process and digital process automation and technology enhancement in an effort to provide a better outcome. So we've seen it again as a company. We've had lots of success stories in lots of different industries. And again, Chesco, as you pointed out, particularly since 2022, when generative AI really is now at the, is really at the forefront of all discussions out there, it really can solve a lot of issues without getting into any of the legal, ethical, and moral problems that, again, we often read about. When you look at mortgage, the mortgage industry, we have hundreds and hundreds and hundreds of serial processes that can be automated that have been done by human beings. And so when you take a look at, the fact that the rate environment is changing, we're now starting to get poised and get ready for sort of a new trend from a volume perspective, most likely first starting off with refinances and then moving into home equity loans. And then eventually, as housing starts to increase in size in the US, we start to do more purchase volume. As our slide says, this really is a catalyst for change because it solves for a lot of the challenges we deal with. It helps us drive costs down. It handles the scalability issues that we were faced with just a few years ago with the tsunami of volume that we had. It helps us improve client satisfaction and handles also the regulatory, the quality, and the legal aspects of the business as well. Because again, those are things that are still going to require human beings. And so in our organization, and I know MOZAIQ feels the same way, it's a balancing act between having people with great domain expertise as well as utilizing those technologies.
Yeah. So with this idea of challenges that lie ahead and the opportunities that intelligent automation may offer, Francesco, let's share a story from a lender and how they positioned themselves to withstand the substantial drop they saw in their volumes by implementing technologies and how they're now reaping benefits from those investments.
Sure. Like Armand said, ultimately it's the metrics and it's the benefits that drive the decision to automate, right? And from what I said also before, focusing on very important aspects of competing in a commodity marketplace like mortgage is important. So let's talk about this West Coast lender, this independent mortgage bank. When they started several years ago, they knew that they needed to compete on what I mentioned before, superior customer service offerings and being the low-cost lender of choice. From day one, in order to enable that vision, they also chose to invest in automation and technology where it made sense, and also to outsource where it made sense in order to buffer the inevitable volume fluctuations that exist in mortgage. When we engaged with them, we heard a lot of skepticism from some of the players, right? They said, well, is technology really going to help me do my job better? And so in order to convince the skeptics, because there will always be skeptics in any organization when it comes to technology implementation and adoption, we started with the low-hanging fruit. Processes like document indexing and loan setup, for example. And we structured the program in, as you see here on the slide, in waves, where we said wave one is going to focus on the basic items. We're going to focus on basic technology like RPA as an example. We're going to use RPA to trigger processes in the LOS. We're going to use RPA to set up the loan file so that the data extraction and the documentation is ready for the downstream processes and allowing them also to be more effective. We also defined metrics, because without metrics, there's no point in automating for automation's sake. We needed to see turnaround time improvements. We need to see cost savings, or I should say, negating cost increases as we scaled. There needed to be a metric around throughput. Can we process more loans with this technology than we could in the past? And we did all that because ultimately, as I mentioned, the skeptics, part of the challenge of introducing these types of technologies in organizations is one of change management. The culture inherently, whether it's mortgage or health insurance or investment banking or manufacturing, you bring in new technologies, people that have been there for quite some time will put resistance in place of adoption or acceptance, right? And so you need to convince the skeptics, and you do that by focusing on iterating quickly, deploying services and processes in an agile fashion, measuring the results in 4 to 6 weeks and not waiting 6 to 8 months for results, because ultimately technology is going to change by then and the market is going to change by then. And so we really have to focus on getting the metrics done and showing the skeptics that it did benefit the individuals and the organizations. Once we did that with the first wave, we started focusing on more complex processes that incorporate some Gen AI. For example, when we look at appraisal review, income and credit reviews, that's in support of a very important resource, the underwriter, right? And so automation did not do or does not do 100% of those processes, but it preps the loan file so that the underwriter can follow up on the exceptions. The underwriter can make the credit decision. The underwriter doesn't have to chase and look for paper and missing documents and erroneous data and key in the data in the LOS that does not match what's on the document in front of them, right? And so prepping the file for the underwriters allows them to be more efficient, allows the throughput to increase, and allows the organization to not necessarily increase their cost basis in line with the growth in volumes. Having said that, we can go to the next slide, Jane, and talk about the benefits. If we see this graph here, you can see the spike, and let me tell you a little bit about that. This same lender in April of 23 acquired the assets of another wholesale lender, and those assets brought with them quite a bit of volume. And at first, there was a bit of a struggle to absorb the volume, but you can see over the course of the last year, they've done quite well in being able to increase and increment that and absorb that growth, right? I'm not saying it's just because of automation and outsourcing, but because of automation and outsourcing, they were able to do that more efficiently. They were able to do that without raising their cost base. And you can see the benefits right there, right? Number one, they were able to double throughput of loans for their underwriters. Number two, they were able to get loan quality close to 100%, which is critical, which is a point Armand mentioned earlier. When you talk about loans going to investors and the investors kicking them back because of inefficiencies or deficiencies in the loan product, automation and outsourcing with expert resources and supporting expert resources allowed us to mitigate those risks. So I'll stop there. Armand, is there anything else you'd like to add here before going on to your case?
Yeah, just a couple points. And again, I think this is really a great textbook version of what can be done. And I think for this particular lender, just think about all this work that's already taken place, the investments that have been made, and everything that's been done as we anticipate even more volume in the coming years. So they're really well poised, and I think that's fabulous. I think the other thing I really like about this story is they didn't try to go out and do this alone, right? They chose a strategic partner, somebody who has the expertise to assist, who sees things from a different lens, can bring the technology view in as well, and so collaboratively working with them for what has already become a real great outcome. So great story.
Well, and with that, let's take a few steps back with the next story. Armand, will you share how you've partnered with one of our clients to help take those first steps solidly on their own automation journey?
Yeah. So again, in the first story that we talked about, this is something that's already up and running. But probably for many on the phone with us today, they're probably thinking about, okay, what is the roadmap forward? We're maybe in a different place than that first example illustrated. And so thought it would be interesting to showcase sort of what I would consider kind of a work in progress. I mean, this is a story with a client that we have, which is a large money center bank here in the U.S. And our journey with them has really been pretty iterative. I mean, they've been a client of ours for the better part of 10 years. And there's been a lot of things that we've done. We handle much of their mortgage fulfillment and all aspects other than the origination of the loan. So we basically do the underwriting, the processing, the closing, and then deliver the loans back, all done in their ecosystem. So by having already all those years of tribal knowledge and domain expertise, not just in mortgage, but within their respective business, we really are also perceived not only as an extension of their business, because again, we are a strategic partner, but we're also kind of an innovation laboratory. I mean, we have through the years, before technology even really started to become more of a larger piece of what happens in this industry, we've been involved in process improvement. So we have a methodology in HCL, which we have several different methodologies, but the one that we deployed here is what we call the 3-lever BPM, which really is an analysis of an entire process from every aspect of what you do. And it can, it involves subject matter experts, people actually performing the functions. It performs, it also includes some of our technologists and some of our process engineers. And so it's a collaborative process where we look at things from a risk and control analysis, meaning are the various tasks being done, have the appropriate controls to ensure that there's no revenue loss or regulatory or legal issues. We include kind of a value stream analysis and take a look at, are there ways where we can provide efficiencies and save money on the behalf of the client? And then what are the candidates for automation? And again, we don't look at it from the lens of just one type of automation. We have a lot of different arrows in our quiver so that we can deploy in the client ecosystem. So we look at it from that perspective. And so this is sort of just an overview and kind of a scattergram here of sort of what that process looks like. And if you could go to the second page, Jane. Here we have a little more of a breakdown of the mortgage loan fulfillment process, where you have the loan application, the initial credit decision, closing of the mortgage, the final loan decision, the funding, and when you take a look at it, we have, and again, this is a very high level document. If you actually saw the entire document, it is just massive. But within each of those steps, we have found opportunities, even more than what we're really showing in this illustration here, and some of the technologies that could be deployed in that specific piece of their business. And then ultimately, what is the transition from a manual effort to the automation that we would prescribe do as far as savings are concerned? Overall, when we look at these types of methodologies, and we're trying to bring in new technology, it's usually about a 40+% improvement in cost reduction. And that doesn't even take into account the other benefits that you get, which really is better manufacturing quality and things being done faster as well. And providing you the scale that you need as well. That's the other nice thing about this, is once you have this technology deployed, you have infinite scalability as your business increases. And then conversely, when we do see the downturns, you also benefit from that perspective as well, because again, it's less dependent on people. People are a very big piece of what we do in this industry. There'll still be a big piece of what we do when you move forward with generative AI. But again, these are going to be super users who have the ability to use the technology more efficiently to have much better outcomes. So they kind of have S's on their chest, if you will. So, Chesco.
Yeah, no, I think, look, Armand, I think there's a lot of similarities with the two stories that we just told, right? I mean, one is the fact that without a plan and without a roadmap, you would not be able to reap the benefits like you've demonstrated here, right? The second is that, you looked at this strategically and focused on building a platform that you could scale and not necessarily apply RPA as point solutions, which is actually a detriment to your ability to grow and support volume increases, right? The third is you had metrics. You had the metrics to measure the success and build on that success and convince the skeptics to move forward with the more complex and more impactful automation components in the solution. And then finally, you again had agility and iteration, and you didn't wait 6, 8, 10, 12 months to deploy these solutions. You did it relatively quickly so that people could see the results and gain and grow from seeing those benefits directly.
Absolutely.
Yeah. And so wanting to bring it back to the audience that's joining us today and meet them where they're at, what does it mean for them? How might they start? Where might they start in their own journey towards automation? Armin, with the different dimensions that we're seeing here, what's your take on the considerations that someone might need to make at the start?
Well, we showed 2 use cases just a minute ago. So certainly, I think everybody on this call in this industry has several use cases where there needs to be a discussion around what can be done for these respective businesses. And again, I think the important message I always have is you don't have to go it alone. I think that's really important. Bring in some expertise in this area. The return on investment, again, is substantial. And I think that's an issue that, in the past, generative AI has only been around for a couple of years. We have seen, lots of deployments with technology through the years, and some of them have been a bit short-sighted and probably have led to outcomes that did not meet the expectations of the companies that bought that. So I think, again, things have changed. The technology today is less expensive. From a budget perspective, again, in the past, everybody was concerned about writing a huge check, and there's lots of ways to pay for technology enhancements today. Whether you talk to HCL Technology or MOZAIQ, a lot of what we do today is on a consumption basis or a unit-based price. Which certainly lessens any of the upfront costs that you've probably been quoted in the past. So again, I would certainly not stay clear of initiating this and starting to take a look at what's available today. In our company, again, we've done a lot of interesting transactions where we've included technology along with services that we provide as well, which really has provided great value to our clients because, again, we participate and provide them with contractually with the anticipated savings, which I think is great too. And we've done that in several industries, not just in the lending industry. When you take a look at HCLTech, I mean, there's been plenty of examples in the news media in recent years. We just did a deal with Verizon where we're their back office. We've done a deal a couple years ago with ExxonMobil. We've done another deal with Xerox. So, I mean, some large multinational companies have sort of taken sort of the approach that we're discussing with you folks today. So I think that there's a lot to do there. And then again, success, metrics. This is an industry that's all about metrics. I think we measure everything very finitely. So again, this is another area where you can see some pretty quick successes measured by your most common standards, KPIs. And then again, tackle the biggest margin impacting processes. And again, there's also a lot of room to always take a look at your business for that process reconfiguration to do things differently. Again, been in this industry a long time, have seen a lot of changes, but the basics of what we do are really the same. And again, we don't have to have human beings doing that. So I think those are really important points. And then as far as the investment, what kind of investment is your organization willing to make? I think, Chesko, you can talk a little bit more from the technology and the technological considerations.
Sure. Thanks, Armand. I think one point that you touched upon was the process reconfiguration, which is critical because ultimately, if you automate a bad process, you're not going to get the same results as an already efficient process that you're automating. So that's something to think about before you start on this journey. Ultimately, when you invest in automation, you are approaching it as any other IT effort, right? Which again, I'll make the point clearly this time, agility and iteration are a must, right? There's no point in waiting 6 months for results. You want something in 4 to 6 weeks. Technology changes too fast. Long deployment cycles are going to prevent you from succeeding. The other aspect is you want to determine your core competencies, right? If your core competencies include mortgage lending, broker management, customer management, if you're a wholesaler, and you have a very strong IT shop, then by all means invest in automation using your team. But if you don't be afraid to partner with the right expert, because ultimately it's not only about the software deployment, the software configuration, it's also about the management and maintenance, right? You're constantly going to configure, you're going to be enhancing the platform, bring in new processes online. If you've got a dedicated team, great. If you don't, then there's a lot of folks out there that can help you do that, right? Another aspect is not just MOZAIQ and HCL, but there's a lot of providers out there today that have easy to deploy and easy to configure solutions. Software as a service is the norm these days. Low code, no code configuration. That's critical for you to be able to take ownership of the platform and tweak it based upon your own business rules as you require. One important point that we lose sight of is finally the stability of the underlying applications. Automation would not work unless it's able to interact with your systems of record, your loan origination system. A lot of our customers use Encompass. Those systems change. You need to make sure that if you're automating and interacting with those systems, that one, those systems are stable, and two, that you can anticipate any changes that are made lest they be detrimental to your ability, your RPA bots, for example, to be as effective, right? Over to you, Jane.
Yeah. So I want to now address the proverbial elephant in the room as we look at the future, even beyond the considerations we just discussed for the technologies that are readily available today and well tested across multiple industries. How do you both see the rapidly emerging Gen AI fitting into the landscape of mortgage technologies and the future of lending?
Sure. I'll start and then I'll hand it off to you, Armand. We talked about Gen AI earlier. It's here to stay. It will proliferate in mortgage. But as I said before, you need to look at it through the lens of responsible AI, right? Lenders need to be careful. Gen AI bots or LLMs are only as good as the data they're trained on. We're seeing more and more improvements with open source LLMs, with proprietary LLMs. But the beauty of this technology is that you can configure it with your own proprietary data. And that's what you're going to want to do if you're going to be deploying use cases that are touching some of your most valuable resources, whether it's a broker or a loan officer or an underwriter, right? We've seen Gen AI deployed already in lenders. I'll give you 3 examples. One is that of summarization and synthesis. Gen AI actually does a great job today, even when you're on a Zoom call, for example, of summarizing the meeting notes and distributing them appropriately and allocating comments to specific resources in the meeting. What we've seen here is also customer service reps that are able to leverage Gen AI to summarize a conversation, not having to spend those 40 to 60 seconds typing in the conversation in a knowledge base. They can let the Gen AI bot do that for them. They can approve the summarization in seconds and then move on to the next customer, again, focusing on customer service. There's deep retrieval. What I mean by that is augmenting intelligent document processing solutions with Gen AI. As an example, Google has deployed Document AI, and It requires 95% less training and quality control than if you were to perform the same functions using a machine learning model. Again, because GenAI is so much more advanced that it can deploy, or it can extract the data much more efficiently without being trained as much as an ML model. And then finally, the loan officer and broker support, customizing a service chatbot, for example, targeting the chatbot, allowing, for example, loan officers and brokers to summarize salient borrower information. So minimizing the task of pre-compiling paperwork and then sending that summary to account executives to determine whether a borrower qualifies or falls within the parameters of a loan. So those are real use cases. Those are real examples of lenders that have deployed GenAI today, and it's only going to get better. It's only going to get more broader in terms of adoption.
And Armin, what strategic decisions do you think mortgage leaders need to take today in order to stay competitive in the next decade?
Well, I know one of the things that's a great question. I think one of the things that we did early on was, because we manage a pretty sizable workforce of mortgage professionals, processors, underwriters, closers, some other administrative resources for our client base here in the U.S. as well as in India and in Mexico. And that's just for U.S. lending. We also have people supporting lending operations in Europe and Asia Pacific region. So we have people all over the globe that are sort of immersed in this generative AI and automation discussion, supporting this industry as well as others. So one of the things that we did early on, and I think this is a really great first step for a lot of people, or maybe a good next step, is to ready your people mentally for this new age. We put people through some pretty extensive training that we created as a company to just get people into the mindset of really how generative AI is going to affect their personal life, how it's going to impact their professional life, and then boiling it down and getting them to understand through some training and testing on what the impact it could have from an ethics perspective, the legal, the regulatory side. And again, what we've really prescribed as a company is marrying the really great domain expertise that we have as a company with great technology that we have as a company, and getting the best out of both of those great assets that we have to really provide good levels of service going forward. So to me, a lot of it is the mindset, because again, in order to adopt the technology, you have to have the right mindset. To Chesko's point before, you're going to have a lot of skeptics out there. And again, I think even when we read, a lot of our industry trade magazines, there's a lot of debate today about technology and its proper implementation. So.
Great. Yeah. And as we wrap up this section on future trends, I want to give a quick shout out to the upcoming MBA Annual Convention and Expo that's going to be hosted here in Denver later this month. I know both Armin and Francesco, you'll be there, and would welcome any of our audience today to come by and chat with you in person. All right, so before we move to answering some of the questions that we've had coming through the comments while we've been in session, I think it's important to highlight the three main takeaways that you both hope that the audience leaves with today.
Yeah, let me just focus on the first one. I mentioned it earlier, but it's absolutely critical that you think about deploying automation in an agile and incremental manner, because ultimately you're not going to be able to boil the ocean. You want to start small. You want to show incremental wins. You want to measure the success, and then use the success to sell and socialize the concept across the organization. And we've been talking about mortgage lending all day today, but ultimately there's no reason why automation can't be used by the HR department, by the finance department, other groups within the organization. So using the incremental wins to socialize the concepts of automation and selling it to the rest of the organization is critical in order to make that really a lasting, impactful initiative within a mortgage lender.
I'll take the second one since you've taken the first, Chesco. And again, I think that automation really is most effective when it's deployed in support of expert human resources. And again, I think certainly in our organization, I think most organizations feel the same way, that one of their greatest assets are the people and the teams that they have created. So taking those really great teams and then marrying it with the latest technology really provides kind of some value add and a competitive advantage in the marketplace, and really poises companies to be relevant in the future business as well. I recently saw an interview with one of the CEO of one of the larger consulting firms in the world, and the CEO said that, listen, it doesn't matter what industry, if you're not an adopter or an adapter of next generation AI and technology, your company probably will not exist in the future. That's how profound the statement was. So something certainly to think about. So tough to compete when you're not doing what everyone else is doing. So and then lastly, again, automation's no silver bullet. The one thing that, again, I've said this a multitude of times during this past 40 minutes is, certainly leverage the expertise. As Chesco said before, whether it's your own internal IT department or got to go with a partner. And again, certainly, I think partnering with somebody who's strategic to helping you achieve your goals is really important in being able to flourish as we start to see our industry rebound and probably have some very exciting years in the years to come. So.
Yeah, great. Well, I want to take some time to field some of the questions that we've had come through the comments. So let's see. So I'll just pose these out and you can decide who will take it up. How do you suggest mortgage firms measure the ROI on newly integrated technologies? Do you suggest any specific metrics or benchmarks?
Yeah, I can start, Armand. I think one of the most obvious ones is the one of cost, right? Because margins are very, very critical for lenders. The Mortgage Bankers Association published a study where the margin on an originated loan at the end of 2023 was negative on average. And so anything that you can do to lower the cost of doing business is going to be critical. The second aspect of that is one of throughput, right? So can you scale with automation and do more with less? For example, allowing your underwriters to process more loans in the same period of time because automation does the heavy lifting for them, right? So I would say that the cost metric is one, and I would say also the throughput metric is another. Armand, if you have any other thoughts.
I do. I mean, certainly, I know when we go down this journey with our clients, we hear a lot about, anytime there's a change, we hear about, we have to continue to maintain the fantastic client experience and customer delight. So that's one area in addition to the costs. And then the other one is the quality of manufacturing. All right. Again, we're getting poised to do a lot more volume out there. So again, I believe that some of the operational challenges we typically see in lending today can be solved through these technologies, and you're alleviating some of the pain points that many people are dealing with today by improving that automation and basically eliminating some of those quality issues. So the quality, the client experience, and then lastly, the cost to produce, which again is pretty common knowledge as to how it's really ballooned in recent years. So.
Great. I'm going to paraphrase the next one, seeing as though we're talking about lenders and the focus on technology. The question posed is about why not, or what are some examples or experience that you have on the use of technology on the servicing side? Do you have any views on the opportunity there?
So I know we talked a lot about originations today because I think that's been a lot of the focus of our companies. Historically, we have done a lot of servicing work. And again, I think when you take a look at what I would consider serial processes, and boy, there's an awful lot of them in servicing as well. I think that there's a tremendous opportunity for automation in anything where there's a serial process. So that covers servicing as well as the fulfillment business. So there's hundreds and hundreds of tasks that are done today by human beings, and then human beings who are checking human beings. So that's a real big piece of it. And again, I think that starts right from the onboarding of loans right on through the retention efforts, for those files. So as well as any of the loss mitigation that takes place. Jesco?
No, you said it all, Armand. I think the starting with the loan setup is critical. And then there's so many other processes in servicing. We just happen to be focusing on the origination side of the business for the last 4 years, and servicing will probably be addressed a year from now or so. But yeah, there's tremendous numbers of opportunities there.
You both talked a little bit. I know in your example, Francesco, you talked about some of the skepticism and resistance that you saw in the adoption of some of the newer technologies. What would be your advice for someone who is also facing resistance?
Nothing speaks better than real world examples, right? And so if there is skepticism, and there will always be skepticism, and there are barriers to adoption, I would say look at what your competitors are doing. Look at how effective they've been in weathering the downturn. Have they implemented any type of automation or technology solution to help them absorb the massive fluctuations in volume? And then within your own organization, like I mentioned before, start small. Start with something that's tangible, something that is impactful, something that people can actually see the results of the automation firsthand, as opposed to theorizing about the results. So make it tangible as quickly as possible.
I think I think that's great advice. I think the other thing I will say is that, and we've seen this time and time again in this industry, is often we do not move and have a call to action until the village is on fire. And so, certainly Chesco's advice is plan A. Plan B is if you wait long enough, you're going to be forced into it, because we're often forced into things that even some people don't want to do, just because of the need to survive. So, yeah.
I know we also touched a little bit on the workforce and getting them prepared to adapt to these changes. One of the questions is, how specifically have you gone about preparing the workforce to have these necessary skills?
Well, since that was my example, so we created actually a whole group of modules in our learning organization with the help of our IT and some outside help as well. And we created about almost 9 hours of content, and as well as, and again, often when we push technology, just like push learning units out. And again, this was all, self-directed work. So we provided all this content, we pushed it out to our people. And certainly we track it just like all of the other required training that we have. So now it's part of our normal curriculum. But then we also had assessments in each of those modules as well. So people couldn't just scroll through it and not pay attention to it. I mean, there was actually some pretty poignant questions as part of a self-examination on each of those units. But we made a pretty deliberate attempt as an organization to basically spend an entire month in making sure the whole organization got through all of that content in addition to their day job. And again, certainly that was met with some resistance from a few. But the reality is, I think the feedback that we got is a lot of people when we talk about technology, are concerned about what does it really mean for me? What's the impact that it's going to have on my job? And I think it really, quite honestly, alleviated a lot of the concerns that our workforce had, because now that they realize that, listen, there's still a human component to everything that we're going to do. There are certain, as we said a multitude of times today, legal, ethical, regulatory considerations that we have to do. What we're looking to do is automate all that is obvious to automate. And so, again, there's a great deal of skepticism. We just saw an example of that in the news in the U.S. just the other day, right? When the dock workers in the eastern United States went on strike. And again, I know it was resolved quickly, but if you recall, one of the most important items to them was the concern that they had that there was the automation that was being brought to their workforce. So again, I think education and getting people to understand how they would coexist, I think, is really super important.
And Chesko, do you see that as part of the change management aspect that you said was also so important in the story that you said with your lender and the experience?
Yeah, absolutely. It needs to be considered from day one. It needs to be part of the plan. You need to find the right champions within the organization, because ultimately you're always going to be the outsider if you are a consultant or a software vendor or a technology provider. You will need internal resources to be the champions and for them to promote. And that's where we've seen the most success, is when an executive, a senior executive, even lower level resources that really buy into the vision, buy into the concepts, they're the ones that are going to socialize and sell it for you. And that's really critical, to find those individuals up front.
Great. Just one or two more questions. I think we have time. How can AI automation in the mortgage industry be secured to prevent fraud or unauthorized access to financial data?
Great question. And again, I think for us, the majority of work we do is in the ecosystem of the client. So it's just going to be a part of the overall ecosystem of the client. As far as making sure that there's no data breach or breach